Let's get a move on then and find out all things that are going on with KEI Industries. What's the growth roadmap, supply chain issues, order book, Capex status, and lots more with Mr. Anil Gupta. He's the Chairman Managing Director joining us. Thank you so much for taking time out. And I want to talk a little bit about the demand outlook for the domestic side. Walk us through which segment is really driving your growth, and will that continue?
Yeah, good morning. Uh, Thank you for calling me. Demand outlook for the domestic market is quite strong, and the major demand is coming from solar power projects and other energy related projects, and also the infrastructure led like metros or data centers, which are leading the major demand. And I think most of the sectors are in the economy are doing well and creating demand for cables and as well as wires.
Right. I also wanted to understand, what about the international business, considering the pressure on export sales because of logistic issues? Wanted to understand what the outlook is going forward, and where is it that you see your exports moving from here?
Export outlook for our company is very strong, and we expect that we should cross more than 15 to 16% of our sales from exports this year, which may be around 12 to 1300 crore, as compare 50% up from the last year. And we have very strong order book position in exports. At the moment, more than 6 to 700 crore orders are pending, and we are on the strong growth path in the export markets.
Kind of revenue guidance that you can walk us through for FY 25-26. Your margins have been stable at about 10 to 11%. Will your margins be maintained?
Yes. Our revenue guidance, as given in my earlier interviews, was 16 to 17%, and I hold on to it. And even we are likely to improve upon it, and margins will be in the vicinity of around 11%.
What will be your margin drivers then, given that you're saying 11% will be held on to? What will be the key factors that will lead to this? Do you think you can further expand on your margins?
Yeah, I'm a bit conservative. We'll definitely try to improve our margins, and as our volumes are going up, our sales are going up, so that is also leading to little bit improvement in the margins, as well as our you know uh, customer customer mix, which is also improving our margins.
Right. Could you also provide us some amount of insight on how is it that you're approaching the volatility that one is seeing in raw material prices, and how it's going to impact your cost structure as well as profitability going forward?
In the past also, there has always been volatility in the copper and aluminum prices, but our margins have never been impacted due to that, because we are always keeping our stocks and metal bookings vis-a-vis our order book in line. Moreover, in case of retail sales, the prices are revised almost every 15 days. So, and we are always having inventories in our stocks, so the margins are not impacted. In fact, in the retail sales, and it is a now experience of last 4 to 5 years. Investors can see that we have not been impacted by huge volatility in the raw material prices in the past also.
You've also seen some strong presence when it comes to the EHV segment, with a market share of around 9% right now. Tell me, how's the demand? Whether you're seeing an increased demand, and also how is the competition right now when it comes to this particular segment, and where then do you see a market share picking up?
See, EHV demand is definitely on the growth path as the urbanization takes place, and demand for energy in the cities increases. Like we have seen that strong demand of EHV cables coming up from the data centers and other large construction projects. So I'm not aware that how you have calculated this market share of 9%, but this business will scale up in the years to come.
So 9% wasn't quite the market share, what we were talking about, just purely the EHV segment, not overall.
No, I understand.
Okay.
I understand, but
Sure.
our market share in EHV segment is definitely more. I don't have the exact numbers at the moment, but what I'm saying is this segment is going to grow substantially in the years to come.
Capex for your brownfield and greenfield projects, will any of that be operational this year itself?
Already, whatever brownfield expansions we have done in our Bhiwadi and Silvassa plants, that are all over and have started generating sales, and that is where the growth is coming up in this year. And so far as our new greenfield project at Sanand near Ahmedabad is coming up, and it will be first phase will be operational either end of this fiscal or the first week of next financial year.
Right. And finally, a quick word on your growth between the government-related orders and private orders. Can you just give us the breakdown?
Our major business is basically now private and also coming up from exports. Government-related business, we majorly sells to the EPC contractors. So our direct business with the government is very, very less, around not more than 5%. And we are trying to, have less and less direct interface with the government because it improves our cash flows.
Appreciate your time. Thank you for joining in. Good to have you on board.
If you like this video, then like, share and subscribe to ET Now.